Today I'm going to talk to you about a strategy that's not only safe, but it has the potential for awesome returns. Returns that your neighbor's not even going to believe. Now, as we're bringing this series on trading for beginners to an end, I'm going to show you a really fun strategy, and it's a little bit more of an advanced strategy. In fact, it combines a long-term play with a short-term play. Now, speaking of this being a safe strategy, most people think the safest strategy is go down to the bank and buy a CD and make 4%. What if I can show you a strategy that gives you the potential to make 68% returns or higher, and you could do it in 4.5 months? And what if you could do that 3 times a year? That would give you an annualized 187% return. That's a little better than 4% in a CD, wouldn't you say? Now, I like to teach this strategy by comparing it to something we do in real estate. For example, you could go out and buy a little house, maybe a fixer-upper, and you could fix that thing up, and then you could rent that house out and make the monthly income. And then later, if someone offers you twice what it cost you to fix it, you can sell the house, right? So think about that. That's good for your balance sheet because that house is an asset that grows in value over time, right? And then the rent is good for your income statement because that's cash flow coming in and income coming in for your family. So you got both. So it's a great thing. Now, there might be some things about real estate that you might not like in the long run, like having to go out and fix the toilet or change the roof or put in a new AC or deal with an angry renter. So what if I could show you a better way, and a way you could do this with a laptop from the beach? All right, it's called writing covered calls. So let's take a look at this. We buy a house, maybe a fixer-upper, then we can rent the house out, and we're going to have income coming in every month. Now, the cool thing about call writing, though, is we're going to have it coming in twice a month usually. I'll show you that in a minute. And then later, if someone offers you twice what you put into the house, why not sell it? You ain't married to it, right? It's just a rent house. But let's relate this now to the stock market world. So I'm going to call this little section writing covered calls strictly for the purpose of cash flow, because there are different ways you can write covered calls. There are different strategies, different ways you can put it together. This one is for cash flow. I don't know about you, but that's one of my favorite words, cash flow. So if you remember the rolling stock section in a previous video, if you hadn't watched it yet, go back and watch that. It's a stock that moves sideways. It's a great example for call writing. In fact, when you can find a pattern like that, it's great. I'm going to use the rolling stock to teach it because it's just makes it simpler. The brain figures it out better. So remember, with the rolling stock, you want to let the stock roll down and hit the support line and bounce up. That's where we would start this strategy because we're going to buy the stock. Okay, now you got to understand that writing a covered call is just Wall Street vernacular. It just means to sell a covered call. Now, this is a little different, is that you probably can't think of too many ideas in the world where you can start a transaction by selling something you don't own, right? You usually buy something to start the transaction, and then it goes up, and then you sell it for a profit. Well, on Wall Street, you can actually start a play by selling something and then buy it back later at a cheaper price. And if you think about it, that still makes money. As long as you sell it for a high price and you buy it back at a low price, it makes money. All right, so now let's look at an actual example. Now, this will be an academic example when you see it. So here we have a stock called MITK. It's actually doing a little bit more of an uptrend, but it's rolling as it goes up. So this works just as well as with a rolling stock. Now, you can see at the far left of this chart that we can buy this stock for $13.60 per share. Now, as this stock rolls up in its little trend, you can see that it hits a resistance line around $15.63 and bounces down. So right as it bounces down, we're going to sell the call option at $15.60. So what does writing covered calls mean again? Writing means selling. So it means we're going to sell the call option that's associated with this stock. So in any transaction, who gets the money? The person that buys something or the person that sells it? Well, the person that sells the object gets the money. So guess what? This doesn't cost you money to do this play. They actually put the money in your account. You get paid right there when you sell this call option. Pretty cool, huh? Now, as it rolls down to $14.50 per share, we'll buy back that call option, and it's going to be worth a lot less, so we make a profit. When it gets up to the top again, we write another call. When it rolls down, we buy back that call option. When it rolls the top, we sell a call. Gets to the bottom, we buy back that call for a little of nothing, and we're making a profit each time. And here we do it once again. the stock hits that 20-day moving average, it starts to bounce up, so we buy it back quickly. We don't make quite as much on that, but we made a little bit of rent money. And now that stock moves up a lot, way above, $22 a share. That's way more than we paid for it. So let's just sell the stock. It's like selling the house, because we can go find another one, right? We can find another stock and do this again. So now let me show you the money. That's the fun part, right? So first of all, you buy the stock for $13,620. But remember, you could do this with as few as 100 shares, and you need to do it in increments of hundreds, okay? But we'll use 1,000 shares. And now we go out after it rolls up and bounces down a little bit. We sell the call option for $600. After it rolls down further, we have to buy it back for $50, so we keep $550. So we keep selling calls and buying them back cheap for the entire duration of the play. Each time we're making around $500 to $650 a month, even after the buybacks. So this is a total of $2,650. This is the money you brought in from the call writing. All right, so now we can sell the stock. We bought the stock for $13,620, and the stock is rolled up, so now we can sell it for $20,300. So now we make $6,680 on the sale of the stock. Now, when you add that up, that's $9,330 profit over a period of about maybe 4.5 months. That is a 68.5% return on investment. Now, if you could find 3 other plays like this for the rest of the year, you'd have potential to make about 187% return in a year. Now, that sure beats 4% on a CD. Brokerage firms consider this the safest strategy there is. So now, in the real world, you think you can do this 4 times perfectly for a whole year? Probably not. You're probably going to have a few little stop outs and buybacks. So what if you only made half? That'd be 90% return in a year. So this play is not only safe, it is a cash flow play, and it's fun. Now, you might be thinking, well, how many of these can we find, really? Well, they're sort of everywhere, so I'm going to show you several that you can find right now. Now, we taped this on February 15th, 2024. These won't be the same ones you find, but I just went and looked and found some today. So here they are. So here's the first one. It's CDNS. That's Cadence Design Systems. And this is a beautiful little pattern. You can see how it's doing the roll. So when you see that roll, every time it dips and starts back down, you sell a call. When it gets to the bottom, you buy it back for a nickel, so to speak. You can see how this one would work great. Okay, here's another one, PARR. This is an oil company. This one is more of a roll, a sideways roll. So you can just see every time that thing gets to a top, you can sell a call, buy it back at the bottom, and make that extra monthly money coming in the whole time that you own the stock. Now you can see sort of in the middle of this one, or on the left third of it, I should say, where it stopped rolling. Well, that's okay. You bought back the last call option there at the beginning of October. And as the stock just refuses to roll up, you just hold it. You don't do anything with it. And then finally, when you get out here to November, you can see it roll right back up again. When it gets to the top, you start writing the call options again. And you get way out here to the end of January, you can sell it and just make your profit. And here's another one. This is DBX. By the way, in our previous videos, this is the one we were using for the rolling pattern, which it was doing on the far left. And then look what it did. It just rested a little bit. Now it starts a nice uptrend flag pattern. Every one of these little flags will work perfectly for writing calls. In fact, the rolling part back to the left would have too. All right, here's another one, NOG. Here's an interesting question. Could you do call writing on a downtrend? Absolutely, as long as it's rolling like this one. And then here's a beautiful little rolling pattern like we've been looking at, Box. This would have been a great example to use. Here's another one, GPK, and it's a beautiful little stair-step pattern moving up, and it would work great as well. You can see the pattern when you pop in the support and resistance lines. Now, we recorded this on February 15th, but you can see these are all recent. So there's a lot of them out there for you to find at any given time. And they give your family the potential to make money every month, like rent coming in, and to own the asset, which appreciates, and then sell it for a profit. It's fantastic. So here's the thing. God put this on the shelf for you. Now, I know Wall Street thinks they invented these things to make their own money. And some of those folks are probably saved, but a vast majority of them aren't. But they're the smartest people in the world with regard to money, all right? And they created it maybe for themselves. But God had you in mind, and he used them to create this for you and your family. And that's the cool thing about it. Always remember that. Everything that God does in the universe, he's doing for his children, for you and his family. Now, I know he lets it rain on the crops of the lost and the saved, doesn't he? That's just his mercy. But his special love is toward you. This is just one of those other great things he put on the shelf for your family to give you the potential for generational wealth creation. If you like this today, then check out the links in the description below, and we'll see you next time.